Spot trading is one of the easiest ways to start trading as a beginner. And if you are someone who is new to trading cryptocurrency and other trading pairs, I really advise you that if you want to start trading, the first method you can use to trade is Binance Spot Trading. So with Binance Spot Trading, it has so many advantages, and it also has a few of disadvantages that I'm going to be discussing in this very section. And in this video, watch it step by step, because we are going to show you step by step of how you can make money using Binance Spot Trading. Now, let me tell you that with Binance Spot Trading, you can make like $10, you can make $30, you can make $100, depending on your risk tolerance and also depending on the strategy that you are going to be using. So we are going to be showing you a strategy that you could implement, in either add on the strategy that you always use, or start using this strategy so that it can help you in your Binance Spot trades. Now, to access Binance Spot Trade very quickly, you are going to be able to click down here on trade, and when you click on trade, you're going to open this section over here. Of course, you should make sure that you see above here that the spot trading, you should see above here that spot trading is really spot trading is selected, so because that's what you are going to be trading on. Now, very quick, maybe if you are new and you just want to know how does spot trading occur, you can see here we have a buy over here. So this is a buy and this is a sell. You can use this intersection. So with spot trading, you buy assets or you sell assets, but these assets really belong to you. You own the assets that you are buying. So when you see over here, this is the trading pair that you are trying to trade. The trading pair that you are trying to trade. So in this case, you are trying to trade Bitcoin against USDT. Bitcoin against USDT. In two trading pairs like this, what you are really trading is this one. The first pair is the one you are trading. In this example, it is BTC. Now the second one is USDT. So you are trading BTC against USDT. If you want to trade and change any other coin, your favorite coin that you really want to trade, you just click over here, and when you click over there, you select and you type here, you type over here you click it and you type which coin you really want to trade. So when I click BTC above here, I want to click here and then I search. So I click and then I search over here, maybe if I want to trade Ethereum. So Ethereum is ETH. So if I want to trade Ethereum against what, you can see Ethereum against USDT, Ethereum against TUSD, Ethereum against BUSD, Ethereum against Bitcoin itself. You understand? Ethereum against Bitcoin. Now we shall see one of the advantages of trading Ethereum against Bitcoin in another video. So if you have not subscribed to this channel and turned on notification, because we are going to bring an episode, we are going to be telling you actually why sometimes it is more important to trade Ethereum against Bitcoin than Ethereum against USDT. So the most common one that we normally use, all of us, is Ethereum against USDT or Bitcoin against USDT. So that is the video for another time. Make sure you subscribe to this channel and turn on the notification button so that you also get that video when it is uploaded. So for this case, I'm going to just pick Ethereum against USDT just for this video. So Ethereum against USDT, assuming we want to trade Ethereum against USDT. Now, the one thing that I want to tell you about the spot market is that this spot market is a linear market. It is a one-sided market, meaning we make profits only if the market goes up. Now, it's not like the futures market. In futures, we make profits whether the market is coming down or going up. We can make profits, but remember, in spot we only make profits when the market is going up. What does that mean? So every time we are trading on spot, we are supposed to look for prices when prices are low. We are supposed to buy when prices are low and sell when prices are high. Buy low and sell when prices are high. But this is the worst mistake that we normally do as beginners. You find that once we are trading, and if our prices start coming down, the few coins that we are already having, we start selling them when you see prices coming down. And when prices are going up, we are buying when prices are going up. So that is one of the worst mistake that everyone, including me. I also made it, and sometimes I also do still make it, but that is the worst mistake that you can make. Don't make that mistake. I used to make that mistake, but I don't make it anymore. Whenever the market, I see the market is coming down, there's bad news, there's something, the market is crashing, that is the best time to buy. Why? Because we buy when it is low and we sell when markets are okay, everyone is trying to buy, that's when we sell. You understand? But don't worry, in this video I'm going to be showing you a strategy that you can start implementing, and it is going to be helping you in order to take your trades. So quickly, before we go into the strategy, I want to show you, this is limit order, that limit that you can be taking. You can be taking limit order here. You'll be able to input in the price that you want. I like using the first two, limit order and the market price. Market price is you want to buy at that exact price at the market. For example, right now the market price is over here. So if I want to buy Ethereum at 1718, I can just press an order right now and buy it. Meanwhile, when I want to use the limit order is different. That if I select limit order, I can come here and say that I will buy Ethereum only if Ethereum reaches 17,000, reaches 1700 sharp. I want it to first reduce to 1700 sharp, and if it reaches 1700 sharp, I'm going to buy Ethereum worth maybe 50 USDT. I'm going to buy Ethereum worth 50 USDT. So you click on this buy, you click on the buy. When you click on the buy, the limit order, it will set a limit order, and it will wait for the price to come to your, for the market price to come to 1700. You understand? That's when it will be taken. That's when the trade will be taken. So what are you going to use, or which strategy can you start using so that you can start actually your spot trading journey? Now, the strategy that you are going to be using, you can come, it is called support and resistance level, but a little bit modified into psychological levels. So support and resistance, you are going to be using support and resistance by applying it in the psychological levels. Now, when you don't know psychological levels, what psychological levels are, you are going to come to Google. Go to Google and type psychological levels. Search about psychological levels in trading. Levels in trading. In trading, you are going to be able to read about psychological levels into details. So psychological levels in trading. Now here in finance, you can read over here Wikipedia. What Wikipedia is saying, that in finance, psychological level is a price level. Okay, let me just get this. Okay, Wikipedia is saying in finance, psychological level is a price level in technical analysis that significantly affects the price of an underlying security, commodity, or a derivative. So you can get your time, read. It applies. You can see it applies in forex. It applies in crypto. We are going to use it in crypto, but it also applies in any trading method that you really want. So here we are. What is this? We are on this example. We are taking Ethereum. Now, what are these psychological levels? These are levels that prices are likely to react, and these psychological levels, they are whole numbers. I don't know if you studied math, you know about whole number. Whole numbers are numbers like 1, 2, 3, 4. Why? Because let me give you an example. Right now, if you saw, when I was setting my limit order, I set it at 1700, and then the price right now is 1719. If I'm to set the next psychological level, I'll be setting maybe at 1710, or 1720. Why? Because even you, when they say at you go to the shop to buy something, it is easier. It will be easier for you to say you want to buy something. You want to buy maybe a bread. Let's say you're going to buy, which example can we give? Let's say you are going to buy a car. Okay, we know there is no car of that price, but let's say you are going to buy a car, and the car, it will be easier for you to say the car is, I want to buy a car of 1700, than saying that I want to buy a car of 1718.95. It is difficult to say that. So psychologically, even most traders will be trading on whole numbers. You trade on whole numbers. That's why here, when someone tells you at that price, when someone tells you that price, it will be easier for you if you are arguing, like in arguments when you want to buy. You will argue that if someone tells you this is the price is selling, you will easily say that maybe you are going to give this person 1710, because this is the next whole number that you can easily look at. So psychological levels are always the next whole number that you are going to be looking at. Now, you can check the link in the description. You're going to check a video that I was talking about support and resistance. And once you want to plot these psychological levels, if you want to see a graph of Binance, you're going to be clicking this candlestick stuff. When you click on it, it's going to open a graph like this where you can you look at the graph on Binance. But it is easier to use TradingView. So check the link below or go to tradingview.com and get yourself TradingView. So this is the app that I really like, TradingView. So this is the app that can help you when you check on TradingView. Check on TradingView. Okay, right now let me change to Ethereum, because you have been working on Ethereum USDT, Ethereum USDT. So Ethereum USDT is here. Ethereum USD is here. You can see a lot of noise in the market on Ethereum here. Okay, now once we are going to support, I'm not going to plot, but if I was going to plot, we are on the phone. It is not a problem to use a phone, but I'm supposed to use this on my computer. So you are going to be you click there, you click on that plus button on your TradingView, then you come to drawing. When you come to drawing, you are going to pick a horizontal line. So over here, pick a horizontal line, and this horizontal line, before you start even thinking of psychological levels, start looking for price action, support and resistance, where prices have been acting. You start drawing your psychological levels. You start drawing your support and resistance. There is resistance here. You start drawing your support and resistance. You start drawing your support and resistance. They are over there. So which method do you use for drawing support and resistance? Please, we talked about that in a video. You can check a video below. You are going to be able to see the video that we talked about support and resistance. Now, the main thing with psychological level is that when you plot your site where you expect support and resistance, now you can see over here that this one, it was at 1751, but because I know about psychological levels, I'm going to round this number off. I'm going to round it to be to the whole number. So I'm going to round it to the next whole number, which is 1750. So 1750. You click on it, then you click on setting. You click on setting over here. Let me click on setting. You click on setting. It is just showing me. You click on the line. So you click on the line. When you click on the line, you come down here to settings. You set the line. You set the line. So when you set the line, you can see the price it is showing here, that it's the price of that line. It is 1751.78. But because you really want to round it to the next whole number for you to get almost accurate, you just click there and say the next whole number is 1750, and then you click OK. You click OK. So you can see that it is now 1750. So what I will be doing, I will plot more psychological levels. I will plot there's one psychological level that I'm supposed to plot here. Let me add one, and then I'm summarizing. I don't want this video to really be too long. Let it be somewhere here. So I would go again and round it off. You do the same thing to these other lines. So what happens with spot trading is, listen to this one. This is the main thing in spot trading. If you are in futures trading, you could sell around this price, because when the price is coming down, you'd be selling. But now with spot trading, you are going to be able to wait, because now the price is above there. You can see the psychological levels over down here. You are going to be able to wait. If you had bought down here, if you had bought already around this region, around the psychological region, you bought down here, you are supposed to be selling now above here. But because you are already above there, now when if you want to buy over there, if you have like $1,000 that you want to use, you don't use all the $1,000. You use like 10% only of your account. 10% and the other 90% should remain in liquid, because you can see prices are looking like they are coming down. Now, as prices are coming down, as they reach these psychological levels, you continue buying. When they reach these psychological levels, you buy. But make sure when it reaches, for example, if it reaches here, you don't use all your money to buy. You buy for the small portion. It reaches here, you buy for a small portion. It reaches here, you buy for a small portion. Now, the same thing happens when prices start rising up. At every psychological level, you have to make sure you take your profits. Once prices are going up, you take your profits. Don't be like these people who are going to wait for prices to go up there, prices start retracing when they have not got a profit. Those are people who have invested and they are holding for a long period of time, which is also okay. But since you are trading, every time prices are around your psychological level, you have to know what to do. If the price is coming down around psychological level, you are buying. Prices are going up, you are taking profits. That is one method that I feel like you can be using to make money trading spot. Just like any other method has its limitation. Let me show you the limitation of this method. The limitation, what is going to prevent you from using this method, is capital P. If you don't have patience, and you cannot wait, you are going to fail to use this method. So patience, you build it with time. As you continue practicing, patience will come. And guess what? If you want a detailed tutorial, a detailed course that has been teaching about how to invest and trade cryptocurrency, check the link in the description below, because this course really helped me so much and is taught by a crypto millionaire. So I was so happy to present for you. So check the link in the description below and get yourself that course that is going to help you learn more about crypto trading and investing. And make sure you subscribe to this channel and turn on your notification button for more of such videos. Thank you so much for watching. See you in the next episode.